Welcome everyone to the Kendall Report. It is Wednesday night and fair amount to talk about, another volatile day. The title of this video tonight is Will the Whiplash Continue or Whipsaw Continue? And I think it may. We're seeing a little bit of weakness overnight, not a lot to speak of. But what we've been seeing is, I'll go through here in the technicals here in a few minutes, is we've been seeing the same pattern that unfolded back on January 24th. So it's doing almost exactly how it was. And I'm starting to get some interesting Fibonacci projections. Not really seeing a lot of traction from our database or anything like that yet, but we'll see. So let's get into just talking about tonight. I saw somebody, probably won't go into a rant about the speech last night. I was pretty worked up. I feel much better tonight, by the way. But the effects of the speech last night are still being felt. And I think some of what's going on out there right now, there's a talk of a ceasefire and some negotiations going on. Who knows, right? I remember I was telling you folks the other night, I was flashing back to the days of the first Gulf War and the Scud attacks, and this is the same thing that happened. I remember when Jim Baker came out of the negotiation room, he said, "I'm sorry to report that there is no deal," right? And everything, the market sold off. I was on the phone with a buddy of mine on the New York Stock Exchange. He just drops the phone on the desk and runs into the pit. And it was just sell, sell, sell when that news happened. So, we're seeing a much different world today. We live in a digital world, not in that analog world that I grew up in. And so we see these things happen very quickly. And I've cautioned those in our live room. I've talked about this a lot. But watch out for the first half hour to the first hour of trading, and that last half hour, specifically the last 15 minutes, because what we're seeing is these spikes on volatility. Yesterday, coming into close, we saw a spike, I think, of 11 handles in 2.5 minutes. Went to a new high on the session, and then collapsed almost another 25 handles from there. So you have to watch out for this. Be very careful, especially if you're a day trader in those areas. I do a fair amount of that type of activity, and it's easy to get caught in these things, and you get too big or have the wrong trade on, it gets ugly very quickly. So be cautious there. I think from a fundamental standpoint, I don't know that anybody was paying attention to any of the news. Maybe they were. Maybe that's why we were up big numbers yesterday. We're looking at ADP came in at plus 475. That was expected to come in at 350. That was good. S&P was up 1.9%. We had the composite up 1.6, and the Russell was up 2.5. So the Russell led yesterday's action, interesting enough. I've been talking about that pattern, which I'll go to again here in a minute, but that relative strength in the Russell is really starting to show up, and that may be the market that leads us off the low. I said that going back maybe 2 weeks ago, or at least, probably 2 weeks ago, when we started to see certain action happen there. And I'm going to review all this stuff in the technicals here. It was interesting looking at some of the earnings coming out. The snow is melting. The symbol snow, it was down 22%, and it's part of that group of companies that's something that like Kathy Wood would like to own, these new innovation companies that are probably still maybe more overpriced than they are underpriced, no matter how far they come down. I think this one's down like 50%, and it's still probably too expensive. And there's a lot of stocks out there like that yet. So that carnage in those meme stocks and in the innovation stocks are likely to continue, in spite of maybe some positive rotation going in to some things. All 11 sectors yesterday were up. I usually tell you every night which sector was the winner. It's always been energy. Not yesterday. It was financials. We saw the 10-year make a complete reversal, go back to 1.86%, and financials did better by just a little bit, up 2.6, energy up 2.4, and there were 5 other sectors that were up more than 2%, tech and materials, to name a couple. But in spite of all that rotation that we saw in there wasn't a lot of traction we got in the database, which I'm going to show you here in just a minute. So just real quick mention, earnings, 220 of them coming out on Thursday. mostly retail and banks. And we've seen a fair amount of retail, and these retail stocks are coming in pretty good. And, like I said, the backdrop of the economy looks pretty good, but there's still a lot of issues out there in some of these sectors. So we also tomorrow will get the claims numbers, expected to show plus 232. Continuing claims are 1.59, probably come in a little less again. Looks like we're just getting some traction, especially with all the mask off. If you notice, there was only one guy in the whole hall that I saw. No, there were two people that I saw in the State of the Union address last night that had mask on. One was some older crippled guy, and there was some other guy, it looked like one of the servants, still had their mask on. But everybody else was maskless, right? So it's been declared the day before, everything's fine now, and now we can go out and function. So maybe this is just part of what we're seeing here from the standpoint of the economy still coming back online and starting to rotate. I've talked about this before. They just built a new big gas station, truck stop just right around the corner from my office here. Yesterday, the gas was $4.09, $4.31 when I drove by this afternoon. So they've got a meter. All these gas companies that got the electric sign out, they've already cranked it up. So we went up about 5% when Biden last night said that they were going to sell 60 million barrels into the market. They were going to deliver those from the strategic reserve. And, the crude went up 5%. I'm looking at last price right now, 113.08. I believe that we printed another high tonight, up 2.24. And one of the things I promised you, which I'll do right after the database tonight, I told you that in our live room, we built an ETF hack, and we took the XLE, the energy ETF, and hacked out some stocks and built a portfolio. And it's pretty insane. I think the energy is still going to be a good place to be. Will financials continue to work after today? I don't know. We'll have to see. So let's go ahead and get into the database, and we'll talk about some other factors that I want to discuss tonight. So as we look at the database, we're at 24.07. In spite of the big rally, 1.97 in S&P and basically a 2% up day, we didn't see much come out of it. There were 488 buys, 442 sells, so we got nothing more than just a rotation out of the database. We're still 24.07, you can see on the screen here, long on the database. So it's interesting that we did not get that any kind of positive rotation here. And I thought, well, maybe we'll get some buys out of this. So what this tells us, as far as the database goes, this is showing you that in spite of this rally that we saw yesterday, we're still grinding out. There's still a lot of stocks that are not even generating short-term buy signals, which means there's still in bottoming patterns. There's negative momentum on a lot of these stocks. Are just not picking up anything. And you folks know the primary metric here is that we need to get above 42% long on the database. We're a long ways from that. Maybe another strong day tomorrow or a flat day will be enough. And I'll talk about a couple of things here in a minute in the technicals, but we're definitely just seeing this database just grind here and rotate down in the lows. I think we're right now 17% long in our intermediate database. So a lot of our strategies are absolutely just in a flat mode. So let's go ahead, and I'm going to bring over on the screen here the portfolio expert database. And this green line that we have here is the XLE hack. It says trading room energy list. I told you I'd show you this. I'll show you what stocks were long, and just a quick review. But you can see this, it's up 23% right now. We built this around right over here. If you can see my cursor here, was around early January, second week of January. So we built this in the trough, and it's just been a wonderful strategy from that standpoint. The open positions here, and I'll do my best to zoom in here. These are the positions that are open right now. It shows which one of our models. You look over here, you can see we've been Apache Corp. We've been long, going all the way back to 12/14 of 2020. I told you that this strategy evolved way back when, but that trade's been on for a while. It's up 127%. But if I sort this by what's come on recently, you'll see Marathon's come on just in 12/28. It's up 38%. So all of these top, let me just highlight this so you can see these. These two here are stocks that were just bought. These are the current open positions. I'm just trying to get to the entry date. I'll get it sorted right here in a minute. So here we go. These symbols were recently bought. They were bought in literally on 3/2, which is today. And they're already showing a profit. Some of these came in on the open and already have 5 or 6% profit. Apache Corp just came in, but I don't want to go through too much detail here. But this is one of the ways to capture this. What we did with this strategy was we just took all the constituents at XLE, put it in our models, and then ran it as an idea of what were we looking for. I talked to you folks on this channel, and we did this in a live room, is what are we looking, what sectors are going to work? And there was only one thing that came up. It's energy. And it's still energy. As far as looking at new trends and things coming up, nothing's changed from that viewpoint yet. Let's take a look at the S&P 500 now. And what we're going to see here is a very similar pattern. I'm going to do my best to try to zoom in on a couple sections here. There's two sections I'm going to point out here. We've got, this was the low on 124. Here's the reversal low from 41.01 that we had last week. And if you notice, I'm just going to box this out. I can't really draw a circle with this. But this little section here looks very similar. We got the reversal and then box where we traded right into the 21 period moving average. 21 period moving average is in play again. It's at, I believe, 44.08. I'll get the exact number here in a minute. And what we're seeing though, PPM1 is breaking out, and we saw the same thing right over here at the end of this pattern. We saw PPM1 break out. And the similarities are shocking, is we never really got any traction. We finally look like we're going to get some traction right here, and the pattern failed. So the setup here is very similar. The 21 period moving average we come into here is let me get the exact number here, 43.9958. So I had it at 44 and change. That was yesterday. It's dropping. So yesterday's high, if I go back one session here, we'll see that yesterday's high, 43.9925, and today's value is 4399.55. So we're basically have a downward sloping ppm 0.21 minus 0.21, which is right at trend mode down. So there's about a 30% probability for it to get above that level. And right now that's not a big rally, about 18 handles to get up there. We just start to look at the market grid. R1 is 4411 and S2 4318. That's what I'm plotting for today's range. And because of this downward slope on ppm2, if you notice the middle indicator here, I've got to, let me zoom in here so you, or zoom out so you can see this. You'll see how this ppm2 is just in a flat mode. It's actually declining, going into a steeper downward pressure. ppm1 is at 0.02, so it's just slightly positive. It's basically flat, and ppm3 is flattened out as well. So it looks like to me we've got a pretty good chance of reversing some of this action that we saw yesterday. Who knows, maybe we get some ceasefire and everything's wonderful, but I'm want to tell you right now everything's not wonderful. If you remember, before the Ukraine situation, there were plenty of issues with the markets and the trends. But there's something I'm going to show you here on this chart that is important. Is we got some new Fibonacci projections as of yesterday, which is interesting. And there are three levels right now. The high target one is 4474, 4616, 4707. And what we're looking at here, we have to go to the weekly chart to see a little better. And so we start to look at the moving averages here. All of a sudden, 4490 is the 10-week moving average. A move up to 4455 to 4475 is very possible in here. We still have very hard down sloping PPMs. PPM1 is a minus 0.74. That's at that 4490 level. So if we did print up at 4470, that's about 100 handles from where we are right now. In fact, we just went positive on the session just now. And so if we're looking at the possible patterns somewhere between the extreme, if we can follow through today, get above R1, which is at 4411, we get above that, then you're going to look at 44. Let me get back to the daily. You'll be looking at S2, which comes in at, R2, 4445. That's right there at the 40-period moving average and the 200-day moving average, 4452, 4445. And then I just talked to you about the numbers in the weekly chart, which is 4570. So you folks know, you watch this channel all the time, I love these clustered numbers. So there's big time resistance between 4450 and 4470, everything pointing for a rejection from those levels. And if we did print up there, that's going to be the place where you're going to want to be looking to probably get short. In between now and then, just expect to see at least a potential for an R1, S2 today, and then the markets possibly moving higher into this Fibonacci projection. I think the higher end projections of this pattern, 4474 is high target one, which would be that the length of the A wave and the C wave are equal. I don't see us getting to the 4616 or 4704. That would be ratios 1.3 to 1.618 times that, and I just don't see that at the moment. It's possible, it's certainly in the probabilities, but there's an awful lot of resistance there at that 4450, 4470 levels. So next market we'll look at is Nasdaq. Nasdaq is already traded up yesterday, right up to that 21 period moving average, 14,329. The high was 14,290. This is yesterday. We look at tonight's action on the futures, 14,227. R1, 14,350, right around that same number there, just above the 21 period moving average, the 40 period, 14,632. Same formation on all of these PPMs. In spite of the S&P being just a little bit weaker, the NASDAQ being a little weaker than the S&P, we're still seeing the same kind of configuration. We got PPM1 basically flat. PPM2 here is at a minus 0.30 though. And that tells us that there's roughly about a 30% chance on trading above that level, 14,286. So we're pretty close to the resistance. So I'm going with the same numbers here on the NASDAQ. R1, 14,350, 14,000 on the downside, looking at the R1, S2 from that standpoint. If we were to take out the 10 at 13,994, then there would be further implications and the possibility of this market rolling over. But I think we won't find that out until we come into Friday. So if we get the whipsaw action that I was talking about, we had the down day yesterday, up day on Wednesday. We can get a down day on Thursday, and then Friday would be the move out of the pattern. And if that gives us one more day to actually cause momentum to bleed off a little bit and raise the probabilities of that type of configuration. Anything, like I said, anything's possible in the environment that we're in, because we're sitting here with a potential ceasefire in play. If that happens, maybe the market goes up just on a reaction to that. But even then, I think you're going to be able to sell that, because there's still a lot of things going on. Powell made it obvious today, and I'm going to cover the Russell next, and I'll get into the interest rates, that they are going to raise rates. They're going to do a quarter, but I think they end up doing 50. We'll talk about that here in just a minute. So looking at the Russell, I talked about this relatively higher and stronger pattern that's going on. You can see the PPMs look quite a bit different than they do on the S&P and the NASDAQ. We've definitely got a different configuration. We're sitting right on resistance here at the 40-period moving average, 2060. I talked about that number yesterday. Here we are sitting right here at 2060. I'm going to bring the RTY up, the futures here. We're trading just above it now because that number is declining slightly. But the PPMs, this is the actual update here based on a flat opening, is we are seeing PPM3 turn up. And we did get also some new Fibonacci projections here, which is going to project us right toward the 200-day moving average that I've been talking about. That number is 2213 right now, and the high target 2094, 2175, and then 2225, which puts us right into that target range right there with that number 2213. So that is the projection, the Fibonacci projection. It's going to take not much actually, just to close a slightly higher close tomorrow will be enough to signal and start to move this higher. I'm going to show you the chart on the relative strength here. And this is, let me get the right chart up. This is the Russell versus the NASDAQ. You'll see here. So this is what it looks like on a weekly basis. We go over to the short-term daily. We're starting to see a fair amount of strength. We're back to where we were back in September and October. And I've told you, I don't know how many times, that for any type of rally to happen, we're going to have to get participation in the short or the small cap stocks. And we're seeing that relative strength play out. I know I've seen a lot of my critics or comments on the YouTube channel telling me that that's not what's going to happen, but it is starting to show more and more that the small cap, there is some rotation. Everybody's looking for something new and cheap and not playing the same old stocks that they've been playing. So next we'll take a look at the Treasuries, and these are getting pretty volatile as well. Sorry about that. What we're looking at is we did get an RTX sell signal. We had a STX buy yesterday. I mentioned that last night. Now we got RTX, and we're back above the moving averages. It turns out that big gap down was basically, I call this as the mistake the market made, and what we are back right into the pattern. There is substantial downward pressure coming into the 10-year at around probably 188, so we're right into resistance. So most likely what we're going to do is set up some kind of box pattern here on the daily market grid, and we'll probably stay right in that range as we go forward. Let's flip over to the weekly for a second here. And weekly, you can see we went all the way down to 21-week moving average, which was really unbelievable. I talked about that last night. That was 165. We went to 168 low, 168.2, and now we're bounced back into the grid, and probably will stay between 191 is going to be the very top here, but we should come back into this range and start a consolidation. Now, one of the things that's happened on this little break here is that we've seen the momentum even on the intermediate start to slow down. And so that is just telling us that there's consolidation here and probably a hesitation in the intermediate and long-term bonds. Take a quick look at the spreads here at the yield curve. Yield curve did flatten a little bit. This is the daily. So we did see it come back in, but it's actually moved up pretty nicely over the last several days. We were down at 0.36. We're now at 0.48. So that's an improvement. This would have to get over 0.6 to feel good, and if that happens, then we will see further movement in the yield curve, and we'll also see further movement in a positive way in the financial sector in the market. So watch that 530 spread. I would not watch the 210s or I don't like that spread. It's, like I've said before, it doesn't reflect true activity within the banking system. I consulted those folks for 8 years, worked with large trading rooms hedging their back end of their risk in the markets, and the 530 is what they're all watching. Okay, so the retail world's watching 230s or 210s, and then but the institutional guys are still stuck on the 530s is the big one, because that really hits the spectrum of things. Okay, now for the fun stuff. I want you to look at the weekly. Actually, while we were talking, we went up another 40 cents on crude oil. And a couple of things I want to talk about before I get into the analysis of this. Is one of the things is this whole onslaught against Russia is theoretically taking a lot of oil off the market. Meanwhile, the U.S. You didn't hear our president talk about they're not going to buy any more oil from Russia. I saw a current report, 675,000 barrels per day we're buying from Russia. That's a lot. Meanwhile, our production here in the United States is down by about 1 million barrels per day. So all we have to do is turn things back on, and we're overproducing by 400,000 that we could be exporting and all of that stuff. So we're continuing to see that. But this spike is that disruption coming into play. Now, if we were to start to extrapolate out where this could go, and this is something I talked about last night, that, I thought we were going to hold just around the $100 level. Well, this is just taking a whole new element. When you get into these kind of markets and they start exploding like this is the weekly chart I have on the screen for you here. When you start to see that type of action, it can go wherever it wants to go. It could go to 125, 130, 140 in a panic. You just don't know. And what we're seeing here on the PPMs on the intermediate, 5.06. Let me get full screen for you. 5.06 on PPM 1, 2.34, 1.18 PPM 1, 2, and 3. And we're just so far beyond the market grid, it's insane. And so what will happen when we get the update at the end of this week, the market grid will steepen substantially. We're going to have the close above the RTX, which will suggest we get 1 to 2 weeks, maybe as many as 3, and sometimes that can be the high of the market. So will be driving the dialogue around this market once we get through this week. But right now, I mean, they've traded up to 114.70. I hadn't looked at the high here, so we backed off of 114. So it's definitely out of control. Some of the reports, I think, our supplies dropped by 2 million barrels last week from 4.6 down to 4.26. I don't have the numbers exactly right, but it's close. And that's also what you're seeing, the drawdown in the supplies. All this stuff is affecting what's going on here. So let's do one last thing, and let's go over. Actually, I'm going to go to the monthly. And so I thought we'd be held back by this 200-month moving average. No such thing. The monthly secular trends were actually already above the March RXT number, which is 111.10. That seemed somewhat far-fetched last night, a couple of days ago. Here we are trading above it, trading, like I said, 114.7 has been the high so far today. So this is the type of market that can come all the way back in. We look at, this is the nearest futures, so there's some premiums and discounts and all kinds of crud in these rollovers. But going back, to this near contract kind of concept, we could be 125, 135 before it's over. And that's why I continue to argue that the energy sector is going to stay strong, because we'd have to collapse below $92 a barrel to cause any real damage with some of those stocks. One of the big stocks that in the XLE hack that I just briefly showed you is ConocoPhillips, and that's been a huge trade. And even this year, it's been a huge trade just since we had some of our short-term models come on. Our long-term model's been long, I think, since November of 2020. So it's a giant trade for sure. And all of this energy stuff is going to continue. I think I did show a chart the other day. It's one that I put on Twitter. And I'm just going to see if I can find it very quickly, if I can. I will bring it up. It'll take me just another second here. All right, I'll bring it over on screen for you so you can see it. And what this is just showing the CapEx in the energy sector. So we are so underinvested. It's ridiculous. And this has a lot to do with the whole ESG movement, has everything to do with this stuff that we're just looking at some ridiculous numbers. It's very similar, and this same situation I went through the other night. It's the same thing with housing. We're under building the needs for housing, about 1 million a year. And we've been doing that for the better part of at least 6 years. So we're probably 5 to 6 million units in housing behind. And now with materials and inflation and everything, it's like, that market may stall. I mean, you look at the prices of homes and what's going on, it's starting to get out of hand where folks can't even finance. And then if you take the higher interest rate, it also affects the ability for people to buy and ultimately probably the pricing power in that market. So energy is king right now. I think it will continue to be that way, even if we see a reaction. Like I said, now, even as far as we are up now, the 200-day or 200-month moving average is at 158. That's probably the floor of this market right now, even if we get some big reaction. So next market we'll cover is gold, and gold continues to be resilient up here. This is the monthly. We're still not getting that big acceleration on the secular charts. Let's go down to the weekly. As I mentioned, we are getting nice acceleration on the intermediate, and we have objectives which we met the other day. We had high target of 1974.20. That was the Fibonacci target. Let me bring that over on the board here. So here it is, high target 1924.20. The high that we hit was 1974.20. The high that we hit here on the weekly was 1976.50. So we printed $2.50 over that, or $2 over it, and then we came back in. But this action we're seeing this week is decent follow through, keeping the momentum in play. The numbers that we need to pay attention here on gold is going to be the 10-period moving average is trying to roll over a little bit, but everything generated a lot of new Fibonacci targets and new potential targets, 2074 men on the upside. So that's basically $150 here from this level on gold. Not sure, the fact that that's getting generated doesn't mean it'll be hit, but what it does tell you is this pattern that's set up is absolutely starting to generate some very interesting numbers. And if you think about the inflation and everything else going on, gold should end up to be a player here. Whether it's being held back by manipulation, that's hard to say from that standpoint. But it's definitely, I think it's going, the buyers will win on this one, and we'll see it go higher. We'll take a quick glance at the daily. I'm sorry, that was daily we're looking at. So we did everything. Let's go ahead and let's do the final market. Let's go to Bitcoin. Okay, Bitcoin finally found some resistance. We did get that RXT sell signal on the 28th. So we've been basically sideways the last couple of days. We're likely to stay under the 200-day moving average. That number is right now at 47,598. We look at just the numbers here. We had a 45,284 high, at 45,179 was R1. So R2 is 46.2. That would be an extreme. looks to me like we're going to see some backfilling. The PPM2 is turning down, but we still have a strong PPM1, but that number, support number, is really everything supported around between 41, I talked about this last night, and 40,000 is going to be the key support. Weekly, I've already talked about this as well, kind of a replay. 62,000, 73,000, 80,000 is the upward projections from a Fibonacci standpoint. We're going to have to close over 49.3 to get a confirmation of that number. So a close over that number would actually confirm these upward projections, and we start to see some acceleration. Right now, there's still negative numbers in the market, in the PPMs. We still have a minus 0.73, minus 2.1. The only positive is that the 40-period moving average is rising in the middle of this action, which is just kind of an unorthodox. So the pattern, if we had to identify what's likely here from a weekly standpoint, I talked about this before, we'd be looking at 41,000 to 49.2 would be the trading range that we're likely to stay in. We should stay there for probably another couple weeks, and we have to get these PPMs to turn up for any type of possibility of getting to these upward bounds that I just talked about. Okay, folks, this is it, the end of the party. So we'll go and move on. Those of you that are in our live room, don't forget, 1 o'clock tomorrow. And the level 2 screen will be up for everybody to use that I train on all the time for day trading. Everybody, thank you for watching. I wish I had time to interact with the comments that you make. I miss our old live streams we did every Wednesday. I'm trying to figure out how to find a place to fit in a live stream, maybe at the end of the week or something. It's just pretty challenging because I'm in this live room for quite a few hours every week. So anyway, thanks for watching. Subscribe, like these videos, do all that good stuff, share them, and we'll see you tomorrow night at the same time, same location. Thanks again for watching.